I think it's one of the worst strategies possible, financial strategy out there right now to defer taxes. Pay them when you can control them and when you know what they are today, rather than deferring it to a date where you have no idea, even the tax environment that would exist in which you're going to withdraw funds from and then get taxes. So that's the first thing. From a tax standpoint, worst thing out there.
Well, great having you here, MC. And before we get started today, we're going to be covering a ton of information. If you're watching this video and at any point you think you see something you like, you hear something you like, or you want to talk to MC or someone from his team to get any of your questions answered, go ahead and email ninja@vipfinancialeducation.com. We'll drop that link below. Be sure to include your first name, your last name, and the best contact number for you to be reached at. And someone from his team will contact you ASAP to make sure that you're going into these things eyes wide open. Let's talk about, a lot of people are relying on 401ks and IRAs, for example, those retirement accounts to be able to have that as their golden parachute when they get into their later years. There's two schools of thought there. There's those people that are, diehard, they're putting into their 401k and their IRA. There's the flip side of the coin, which is more of that investor mindset of people that are anti 401k and IRA because, and I definitely subscribe to this, I can outpace a retirement account with my investment strategies. I can outpace Wall Street returns with my own investment strategies. And I can promise you, I trust myself a lot more than I trust the federal government. So what are your thoughts on that? Do you have your own ideologies as far as that goes? Or are you recommending that people do, obviously, a diversification of that? Maybe they're putting something into Wall Street, keeping some money in their retirement accounts, but they're also, going out and doing their own independent investments as well.
Full disclosure, I don't have any retirement accounts, and I also do not have any capital in Wall Street. So I just want to disclose that. So how I look at this, we mentioned taxes, right? So taxes is a big theme. And if you look at where governments are fiscally, I mean, it is a disaster. The financial state of governments all around the world is a complete train wreck. They are in so much debt right now. The United States is running at about a deficit of $1 trillion every 90 to 100 days. We said, I don't know, about $15 trillion ago that this is unsustainable. It's still running. But there's no solutions for this, right? The politicians in any country don't have a solution for this. The only solution that they have is inflate the currency, generate more numbers on the screen to float in the economy, and also raise taxes. And still, historically, the United States currently, if you look historically at tax rates, we're still very, very low relatively to where they have been in the past. So knowing this, with retirement plans, you put money in a qualified retirement plan like a 401k, 403b, IRA, and you get a tax benefit for that. And then your capital grows in those vehicles, and then you get taxed 10, 15, 20, 30, 40 years from now. How does that in any way, shape, or form sound like a good idea of what I just shared regarding the tax the tax threat that's there? I just spent some time in South Africa. This tax threat that's there and that's coming is not a black swan. It's a gray rhino. You can see it, you can hear it, you can feel it, and you know it's coming. So I think it's one of the worst strategies possible, financial strategy out there right now, to defer taxes. Pay them when you can control them. And when you know what they are today, rather than deferring it to a date where you have no idea, even the tax environment that would exist in which you're going to withdraw funds from and then get taxes. So that's the first thing. From a tax standpoint, worst thing out there. And from a control standpoint, I always believe business owners and investors, which have control over the business and their investment portfolio, there's no return in the marketplace or in any of these vehicles offered in any of those funds that can beat what you can generate in your own business and growing your own investment portfolio. I just haven't seen it. There's just no way. I mean, the magic 8% year over year number, average rate of return that's pitched just by Wall Street to entice investors to invest there. It's just again, average rate of return. Business owners and investors will absolutely smash that return and that number at any given point in time in their business and investments.
100% agree, and obviously the government's got a vested interest in people continuing to put money into keeping Wall Street propped up with purchasing of those mutual funds. So they've got a big time dog in the fight there. So some of their policy there just seems a little bit counterproductive. But also, having those dollars in there also kind of props the economy up. And even if it's completely falling apart on the inside, at least it looks a little bit sexier on the outside when those things are happening. So I think that you and I share a lot of the same viewpoints on that as well. And we're certainly not telling everyone to make a run on all their stocks and completely liquidate that. I don't subscribe to Wall Street like you. I've got $0 in that. I do not utilize a 401k or an IRA account either for the exact same reasons that you share. And I think a lot of professional investors and entrepreneurs feel the exact same way. I can definitely outpace what those investment vehicles would be doing for me if that's the way I was deploying my capital.
Yeah, absolutely. You just have more control over it. And of course, you can develop a strategy where you have savings and investing operating simultaneously next to each other, so that you always have a good balance and a good buffer within your strategy. Most people have a primary residence, maybe a second residence or investment property, and a diversified portfolio in stocks, bonds, and mutual funds in the stock market. And that's it. There's no element of savings or even a cash cushion or a war chest of cash to capitalize on opportunities.
Yeah, and one of the reasons why we continue to bring you on over the years, among other things, is you just have just a wealth of knowledge, and we've talked about it here often, and we'll drop the playlist to the infinite banking concept. So when you're talking about controlling your own investments, really controlling your own destiny, outpacing the other markets, can you talk about infinite banking concept right now and just kind of give it just a general overview and really why it's more important now than ever because of all that volatility to get involved in that?
Yeah, so infinite banking is a strategy where you utilized a dividend-paying whole life insurance policy with a mutual life insurance carrier. So very important. Mutual life insurance carriers have been around since the mid-1800s, profitable every single year since the mid-1800s. They pay dividends, which is profit sharing, to their shareholders, their policyholders, every single year consecutively since then. Now, just think what has happened since the mid-1800s to now. We've had a civil war with two different currencies circulating, grayback and greenbacks. This is prior to the creation of the Federal Reserve System in 1913. You've had two world wars. You've had economic crisis, market crashes, the Great Depression, the Bretton Woods moment. A new financial system was created in 1944. You had Richard Nixon take the world off the gold standard in 1971. You had the creation of the petrodollar in 1974 up until now, and they performed. That's the counterparty risk when you set up these policies and these contracts, and they're very specifically designed to maximize cash value. So yes, it has a death benefit as a life insurance policy, but it's where you warehouse savings. It's a supercharged savings vehicle. So the money going in there is guaranteed. It's guaranteed to grow. It gets these dividends, which is not guaranteed, but they've paid them, for 170 years consecutively. And then also you have guaranteed access to this capital. Very important in times of crises. In 2008, 2009, I had a bunch of HELOCs pulled on me, right? And some banks just disappear. One which I banked with, Washington Mutual. Nobody even knows it existed. Countrywide Financial, remember that went under? So, guaranteed access to capital is key. So you have that through a policy loan, and then you can add different riders to these policies, like a disability, to protect yourself and your family in case you become disabled. It has a death benefit, which then pays out a death benefit tax-free to your beneficiaries. It's private. Nobody knows you have it. Very important for business owners and investors because lawsuits go up in bad economies. And then also it has asset protection in most states. So when you have capital in this, every state is different, but in most states it has asset protection. So in the event of a legal situation or litigation, that's protected too. So this is a rock solid foundational asset, which I write about too. In my book that you mentioned, I appreciate you mentioning it, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably. There was a #1 seller on Amazon. I shared this more about this strategy, and it's how people can set up these policies, make sure they're set up correctly as a supercharged savings account so that they can access the money to then utilize for investments. And having this bucket that's liquid and ready, it's like a war chest that you have as a business owner or investor to access at any time to grow your business, to hire employees, invest in technology, and so forth, or grow your investment portfolio, is a secret superpower. You're always going to have a back bucket of capital that you can access to grow where other people might not, when their credit lines get cut off at the bank. So this puts you in a position of strength. So in this strategy, in this environment where you could still do deals, great deals, 18 to 24 months where you're in and out of deals, along with this bucket that just keeps growing, is a great strategy. So that's why I call it Get Wealthy for Sure. If you have capital in a place that is growing uninterrupted, tax-free, that you can access through a line of credit. You never draw down the account. You use it as collateral to access more liquidity. I mean, it just puts you in a position of strength, right? Because you'll never have your capital go down in that vehicle. You have access to it at any time, and now you have more clarity, confidence, certainty, predictability operating in the economy today.
Yeah, so if you're watching and you want more information from MC and his team and think maybe infinite banking concept could be a good fit for you, or you just at a bare minimum want some of your questions answered, go ahead and email ninja@vipfinancialeducation.com. We'll go ahead and drop that link below. Be sure to include your first name, your last name, and the best phone number to be reached at, and MC or someone from his team will reach out to you right away and answer any of the questions. Powerful content today, MC. Could not be more appreciative of you coming on and sharing this with our channel audience. Super relevant, obviously, right now based on what's going on and the economy.
Thank you so much for having me. Appreciate you.
Yep. All right, y'all. Well, appreciate everyone watching the video today. Stay tuned for more videos here as the week goes. And until we see you on the next one, take care and make it a great day. Thank you.